I come from a poor background. Everyone's heard the saying, money doesn't buy happiness. Well, I can definitely tell you, neither does being poor. In my childhood and adolescence, I was increasingly unhappy with the environment, the prevalence of drugs and crime, the disdain of ignorance or education, and intellectual pursuits. I felt like an outsider. I made a promise to myself to focus on increasing wealth in the future so that my children will not have to suffer the same fate I did. While I agree that money isn't the only contributing factor to happiness, one of my favorite quotes was, "Money doesn't buy happiness, but it's more comfortable to cry in a Ferrari than on a bicycle." In my pursuit of figuring out how to build wealth, I kept running into phrases such as, "The rich get rich and the poor get poorer." While I do believe there's some truths to that statement, I think it dismisses the fact that educating yourself in a wealthy country is the key to becoming rich. The following are the only 3 ways of building wealth. Very simply, the stock market is a way of buying a portion of ownership in a company. If you buy shares in Apple, you're actually buying a portion of ownership of Apple. Now, the way you make money in the stock market is the price of that share can go up over time with more people buying it at a higher value, which means your value has actually increased. Or the other method is that some companies can choose to split those profits with the shareholders or owners in the form of a dividend payment. So if you hold the shares, you actually get a portion of that profit. Now, that being said, investing in the stock market does have risks. If you put your money in a handful of businesses and they don't do very well and they go down, you can lose your money. In fact, many of the top 30 companies 30 years ago are not in the top 30 anymore. Now, one method of getting past this is to look into index funds, or ETFs. They're basically a collection of companies put into one package or basket of shares. So by putting your $100 into an S&P 500 ETF, your $100 would be split up into all 500 companies in that ETF. Now, this is accounted for weight, so more of your $100 will go to the bigger companies in that package of shares. This method attempts to get you the market average. As some companies rise in value and others drop, you'd get the average. The historic annualized average return of the S&P 500 is 11.88% from 1957 to the end of 2021. This would mean you have a decent chance of getting around 10 to 11% growth a year over the long term. To put that into perspective, every $100 you would invest would roughly turn into $4,500 in 40 years. For many, following an index or a list of companies is far more convenient than trying to pick the best individual stocks in the market over the long term. Just know that investing in the stock market is not a get-rich-quick system. Due to the prices going up and down, being volatile, you want to invest with a medium to long-term mindset. It is the slowest of the 3 methods, the least barrier to entry, as you only need a few $100s to start. Investing in real estate has a large barrier to entry, but a potential to build wealth way more rapidly. With real estate, you make money by purchasing the property and waiting for the value of the property to rise. You can also rent out the property to tenants, which also brings an additional income. So similar to shares, you get 2 forms of wealth creation, but depending on your country, there's also tax breaks associated with owning investment properties, providing further ways of creating wealth. Now, depending on your country, the return on real estate, including tax breaks, can be very comparable to the average stock market return, with about a 4 to 6% value appreciation on the property and 3 to 5% rental income. So in total, about 10 to 11%, just like shares. The power of real estate, however, comes from the ability to leverage borrowed money. You might only put down 10 or 20% and the bank puts down the rest, but you receive the full appreciation in the house value as well as the rental income, speeding up that wealth accumulation. Now, initially, the barrier to entry in saving money until you can put together a home deposit is a big one, but once you've invested one property, as the value of that property goes up and the mortgage gets paid down, you're left with equity, or something similar to invisible money. In real estate, you can use this invisible money or equity as the down payment on another property, creating a domino effect, acquiring a property, then using the eventual equity to go into another, and so on. Now, this is not without risk. It can also work against you, as if your properties lose value, they can lead to the domino effect working against you, spiraling you into debt. The barrier for entry into real estate is far greater than the stock market, but does allow for a quicker wealth accumulation thanks to leveraging borrowed money and the use of equity or invisible money, but it does come with greater risk. And finally, starting a business has the most potential to build wealth. Think about all the rich people that immediately come to mind: Elon Musk, Bill Gates, Jeff Bezos. They all achieve this great wealth through creating businesses. Now, creating a business doesn't have to be brick and mortar. It can also be something that you're creating value in. It might be consultancy, it might be building a brand, it could be your voice. Creating a business, however, is the biggest risk versus reward. On top of the money you put in to start a business, your work hours would also need to skyrocket in order to create a chance at the most success. Data from the BLS shows that 20% of new businesses fail in the first 2 years, 45% fail in the first 5, and 65% fail by the end of the first 10 years. However, the upside to this is the potential returns that lie ahead. Building a business that you can successfully scale and not link to your individual work hours unlocks the ability to multiply your earnings, making building a business the most difficult, but by far the most rewarding of the 3 ways to build wealth. To recap, entering the stock market has a low entry barrier, but takes a long time to get desirable returns. Real estate has a high barrier for entry, but can steamroll wealth through the power of leveraging borrowed money and equity. And finally, creating a business is a huge risk versus reward in time and money, but has the potential to give incredible returns. No matter which strategy you choose, you're going to need time, hard work, and education in order to succeed along any of the options. Make sure you do your own research, be committed, and put in the hard work.